Hello there, this is James and you're watching Tixee Live. Forgot to turn the background music off, then I'm so excited. Yes, in fact, you're watching a Tixee Live watch-along of the US Non-Farm Payroll. But before we all get started into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. Now, of course, it is NFP Day. So happy NFP Day to everybody. And hello there. Hi, nice to see you. And Eric, great to see you, buddy. I hope you're good. It's not too late. All good for you. Good to see you, buddy. Anyway, so yes, today is NFP Day. Happy NFP. Now, for those individuals who are new to the industry, you might not know what the NFP actually is. So it's a brief description of it. The NFP, or the Non-Farm Payroll, is released by the US Bureau of Labor Statistics, and it's the number of new jobs created in the previous month, not including farm workers, hence the title Non-Farm Payroll. Very imaginative title indeed. Any predictions? Yeah, well, yes, I will be opening it up to the room actually in a bit, Eric. But yes, I will indeed actually. Have some predictions. And I hope you have some predictions too. You share me what you think. So in the rule of thumb, the higher the number, the more bullish for the currency. That's the sort of general consensus. The lower the number could be bearish for the currency. But as well as obviously the NFP, we also have US unemployment and average earnings. Now, we all know what unemployment is. It's the percentage of people who are currently unemployed. That's pretty self-explanatory. But average earnings, what is average earnings? Well, average earnings is again released by the Bureau of Labor Statistics. And it is the change in the price that businesses pay for labor. In other words, pay rises. How much people are earning? Is their salaries going up? That's basically what it is. Now, the higher the number, again, similar to the NFP, the higher the number should be positive for the currency. The lower the number could be negative for the currency. Okay. Now, going back to the NFP expectation is 250,000. So I think maybe 3.5 or 3.4. True. I would check. I'll tell you in a minute what I think, Eric, because there's a split house on this and what the number could be. So you're thinking 350,000 or 304,000. There is a rumor about that, and I'll talk about that in a second. But that's a good one. I like it. Hello, Michael. Nice to see you. Thank you for coming along. I hope you're well and having a good day. So the expectation is 250,000, down from the previous figure of 372,000. When it comes to US unemployment, okay, US unemployment is expected at 3.6%. Average earnings, month on month, expectation 0.3%, the same as it was last month. Now, if the NFP does come in indeed at 250,000 as expected, that will be the 19th month of gains in payroll, 19th month. And in my particular opinion, at the moment, it's all about the labor market. Okay, the labor market is extremely is the key at the moment for several reasons. Because obviously, as you know, we have this ongoing debate whether or not the US is actually in a recession. Last week we had the US GDP, which came in at negative 0.9%. Which was the second quarter in a row they've had a negative reading, which technically means you're in a recession. However, you've got the other camps saying it's not a real recession. I don't know what they mean by saying it's not a real recession. It's not a real recession because the labor market is really good. Our labor market's really strong. So when you have a good labor market, we can't possibly be in a recession. So that's the argument. So this is why it's the key in so many ways to the recession argument and to something else. Now, here's the thing. A slowing down in the number could lead to the argument that, yes, we are in recession. And the other reason why this is key is the lower the number, or we have a slowing down in the number, the market has convinced itself that the Fed will be gentle on interest rates, will be less aggressive. And here's the thing, they might have a point here. Let me compare you two numbers here. This is the NFP, okay? All right, and we can see something here. January, 504,000 new jobs. February, 714,000 new jobs. March, 398,000. April, 368,000. May, 384, and June, 372. Okay, so there is a slow decline. Initial claims, unemployment benefit. Last one, going back to same, 6 weeks. 231. 235, 244, 261, 254, 260. So there's an increase in unemployment as well, unemployment benefits. Now, going on to what Eric said. Yeah, like I say, be risk off, won't it? It would be risk off. So Bitcoin will be one of those which will suffer. So okay, hello there. 380,000, you think? Or was that your unemployment guess? 3.8%. Oh, sorry, Eric, was that your unemployment number? 3.5 or 3.4? Okay, that's a good estimate. Okay, like I say, so now going on to the actual number, there's some good estimates there. Going on the number, there is whispers that the number could come in at 300,000 to 350,000. Okay, 300,000, 350,000. However, like I say, there is also those on the other side of the fence who thinks we could start seeing cracks in the market. Like I've already said, initial claims is rising. Plus, the likes of Google, Tesla, Microsoft, Apple are freezing hiring and making layoffs. So, yes, could we see the cracks in the labor market this time? Could we see cracks? Now, unfortunately, I'm talking so much. Yeah, I'm sorry. 3.5% on the unemployment. That's potentially, so it looks slightly lower than 3.6. You never know. What's your NFP estimations? Do you agree with the whispers of the 300,000, or do you think we can start seeing cracks? Anyway, there's a couple of scenarios the way I see it. Okay, scenario one, we see better than expected. Okay, could lead to a stronger US dollar as the market believes the Fed will do another 75 basic points. So stronger dollar across the board. Scenario one, potential scenario one. Scenario two, lower than expected, could lead to a weaker US dollar as the market believes the Fed's going to be gentle with interest rates, which I don't believe why they're talking themselves into that. I've got to rush up because it's nearly time. Scenario number three, lower than expected, could lead to a stronger US dollar and gold as well as recession fears creep in. So there's two potential scenarios to a lower number. And finally, scenario number four, whatever the number, and this does happen, the market ignores it and takes time to digest it. So it could be that too. Right, I am talking too much. We have 10 seconds to go. 10 seconds to go. I've got my trusty mobile here with me, ready to see what it is. So 10 seconds. Right. Okay, here we go. Come on. Let's bring up the charts as well. Oh, straight away, Euro's under pressure. Straight away. This is the Euro. I got my charts there. The Euro's under pressure. Right. What is it? Come on. Any minute now, guys. Any minute now. It's just loaded. Any minute. There must be something here. The Euro has spiked down quite dramatically there. Come on, what is it? Tell me. Okay. 528,000 new jobs created. Eric, you're on the money about unemployment. 3.5%. 3.5%. You're on the money with that, my friend. Average earnings, 0.5% on average earnings. I'm flabbergasted by that number. I really am. I'm absolutely flabbergasted. Eric, spot on with your unemployment reading, buddy. Spot on with that. Absolutely spot on. Plus, they revised the previous NFP number to 398. 398. That's just something else. That is that's shocking. Well, we start. Look, I'm just digesting this now. Wow. Okay, so right, scenario one it is. So stronger dollar. Let's have a quick look. Right. Yeah, dollar. Yeah, look at that gap. Open with a gap. Now trading past that key level of 133.36. The sterling dropped with a gap. Currently trading now at 1.2077. How did gold get on? Gold dropped. Look at that, from $1,788 it was trading, now under pressure at $1,775 an ounce. Absolutely amazing. Yeah, well done, Eric. Well done, Eric, with that prediction on unemployment, mate. Brilliant, spot on, 3.5. Wow, what a number. How's the look at that, yes. S&P 500 is under pressure. They're basically now looking at it because that number is so good. Now looking at that number is so good that, yes, the Fed are going to carry on being aggressive with interest rates. This is why we're seeing dollar strength across the board, and this is why we're seeing a sell-off currently in the stock market. This is it. Scenario one, like I said. Better number, better than expected, stronger US dollar, because the market goes, yes, the Fed will be aggressive. Well done. No, Eric, well done, buddy. Well done. Wow. Right, euro now. Let's have a quick look on the daily. But this could be the kickstart for parity again. I do believe euro will go to parity at some point again. Wow. That's shocking. That is absolutely shocking. Wow. Wow. I just can't get over that number. I really can't. That is something else. Yeah, so again, just to reiterate, to go over it again. I've even lost for words even. Just to go over it again. Okay, yeah, like I say, average earnings is 0.5 average earnings. That's good. Unemployment 3.5. That's good. And non-NFP 528 versus the 250 expected. And they revised the previous figure of 372 to 398. Wow. I mean, what do you guys think? Are you just as blown away by that as I am? Because I really am blown away by that. I'm really blown. So there's no cracks in the labor market at the moment, and basically that means the argument about whether or not the US is in the recession is still going to go on, because they're still going to deny it. And like I say, with that strong labor number, how can you deny it? Or how can you claim to be in recession with a high labor market like that? 528. So yeah. Wow. What do you guys think though? Are you amazed by that? Eric, really good guess though, bud. Really good guess on unemployment, 3.5. Really good. Really good guess on that. Wow. Okay. So the slowdown isn't here yet. It isn't here yet. So let's see. Obviously now we got to really now. The other thing we need to think about is what's happening next week, of course, which is the US Consumer Price Index, the CPI. Don't forget, last time it shot the market, it came at 9.1. Yeah, wow. Indeed, wow. So CPI is going to take center stage from now on. It's all going to be about that. And obviously with this, and if we have another record CPI come in higher than 9.1 or stays at 9.1, then boom, the Fed is going to start, maybe the market will get very nervous and really start thinking about another 75 basic point rate hike by the Fed. And don't forget, the reason why the market's getting nervous is because the higher the interest rates at the moment, their general consensus, the market can't handle it and it will tip us into a recession, a full-blown global recession. So that's the thing on that. But anyway, wow. Sorry, guys. I got a little bit lost there. Really blown away by it. Is there anything else anybody else like to say? Any other questions at all? Anything else? No, unfortunately, I don't speak Francais. Sorry, but hello there. Nice to meet you. I hope you're well. You're having a good day. Nice to meet you. Thank you for coming along. Anybody else like to say anything? I mean, what do you think, Eric? You amazed by that number? I'm really amazed by that number. But it goes to show. And like I say, do you know what I really feel sorry for? Those people who, because the summer months, decide not to trade, and they sort of go away. Like they use the old feeble, sell in May and go away. It's still under a lot of pressure at the moment. Strong, good question. Strong dollar. It's still under a lot of pressure. Currently trading again around about $1,775 an ounce. So we're seeing dollar strength across the board, and that's what's pushing the yellow metal lower. There's a bit of buying here, obviously, at the moment. That's the 200-day move, 200-day moving average, that is. So there's obviously a little bit of buying there from that. But I think it's going to be pressured, right? So let's have a quick look, see how the euro is doing. And the pressure dollar yen. Can we get to 140 again? Or can we aim for 140 again? Can we do that? So yes, wow. Okay, so any other questions at all? Anybody else like to say anything? Or say hello even? This is a live broadcast after all. And live does mean live, obviously. It's my slogan. Well, one of my slogans. Okay. Okie doke. If there is no questions, not to worry. Don't forget, if you think of a question, what is the best way to trade? Hello, Michael. What is the best way to trade? Best way to trade the NFP. Right. Okay. That's a very good question. With a lot of caution. No, all joking apart, Michael, that's a good question. Look, the NFP sometimes, because it can be so volatile and unpredictable, a lot of times it's sometimes best to sit on the sidelines and wait to see what the market digests and how the market reacts, because quite a lot, obviously this time we haven't. We sometimes get a market feint, which is a quick spike in the opposite direction before then correcting its course. Sometimes with certain news, it's best to wait to see what happens and then see how the markets digest it and then go into the market when you see potential key levels. So I would always say caution with the NFP because it can be incredibly volatile. But a great question, Michael. Thank you. A very great question. How about the dollar CAD? That's interesting. Let's have a quick look at the loonie. Because obviously the loonie's under pressure at the moment in particular, because obviously we see oil being sold off quite a fair bit at the moment. Because obviously oil is under pressure now because of a lack of demand. So, or fear of a lack of demand. So obviously the loonie, spike again. The dollar spiked higher there. I mean, there's a nice gap. I haven't seen these gaps in the currency markets for a while. You see it all the time in stocks, but not often with currencies. Well, I haven't seen it for a long time anyway, like that. So there's a nice little gap there, 129.31. So yeah, stronger dollar against the loonie as well. So yeah, okay. Any other anything else? Anybody else like to ask me anything? Any other questions? Michael, just so you know, going back to your question, just so you know, I will be in the future, I will be doing educational webinars as well, where I will cover and go into a lot more details about certain trading techniques as well, and finding a trading style which sort of suits your personality, that sort of thing, because trading can be very, very personal. So just so you know, I will be doing webinars in the future to go not just market related, but more in depth about these sort of things. So that will be coming soon. And as well as that, like I say, I said last week, I want to do a tixee live special. a Tixie Live special, because somebody asked me a question, left a question on Facebook, sorry, on YouTube the other day, and said, I'd like to know more about trading because I'm new. And I said, well, brilliant. I've got a great idea. Why don't you send in a topic, put a topic in the comments on either YouTube or Facebook. I will see it, and then I'll do a special Tixie Live broadcast, and I will focus on that topic as an education. More education. I still talk a little bit about the markets, but I do a lot more focus on that. So if you've got anything you want to know, want to learn, leave it in the suggestion box, or sorry, suggestion box, in the subscription even. Leave it in the comments, okay? And I will do a special on that. Does this mean they still say the US is in a technical recession and not going into a recession? Look, like I say, there'll be two arguments on this. It's two camps. Those who are looking at negative 0.9 GDP saying recession, and they're saying, no, our labor market is so strong, we're not in recession. So it's going to carry on that debate. This is not going to take away totally the fact that we're not in recession. It's going to make a bit more of a difficult argument to win saying we're in recession with such a strong labor market. However, all recessions are slightly different. So no, it's still going to carry on with the two different camps. You're welcome, Michael, and thank you, buddy. Thank you for coming. Is there anything else? Anybody else like to say anything or ask me anything at all? No. Okay, if there is nothing else, what a watch along we've had today. What a watch along. Like I said, I was literally speechless for a couple of seconds when it first came out. Literally speechless. But hey, anyway, what a cracking watch along. Special shout out. What do you think the Fed's going to do next pricing in September? Okay. Sorry, excuse me. Good question. I generally think, okay, this good job number, and if we have a high CPI next week, I think this will give the confidence for the Fed to do another 75 basic points in September. I think this will boost them to do another 75 basic points. This will give them confidence to do that. And I think the market will start looking that way as well now as well. They'll start expecting it to be another 75 basic points. So yeah, that's what I think. But let's see, because don't forget, they've been incredibly hawkish. They started coming out being very hawkish. I know a lot of people took the FOMC monetary statement and press conference a couple of weeks ago as dovish, but in general they've been pretty hawkish recently with some comments. What was it? It was Bullard, I believe. He said he wanted interest rates by the end of the year to be at 3.75 to 4%. So he's still quite aggressive. But good question. Is there any other questions at all? Is there any other questions? But anyway, like I say, if you think of a question later, drop it, put it in the comments on either YouTube and Facebook. I will see them, and I will answer it next time I go live on air. Talking of which, don't forget, I'll be back on air in about 45 minutes time, just to do a recap of this, how quick look at the market, and do my usual weekly roundup of what's happened this week. And again, we've had another exciting week of plenty of drama. Special, you're welcome. Thank you for coming, and thank you for asking questions. So anyway, special shout out to Eric, Michael, Roman, I believe that's name is pronounced, SMF 790. Special shout out to you guys. Thank you so much for asking questions and interacting. It's brilliant. I hope to see you again soon, all of you. And thank all of you for coming along and sharing this watch along with me. It's been a great experience, and it's been a good one. But don't forget, I'll be back online again in about 45 minutes time to do the afternoon session and all that. So please come along and join me for that. And remember, if you're watching me on Facebook and you enjoyed this little episode, give us a follow if you like. If you're watching me on YouTube and you like this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and you put up with me, my over-the-top enthusiasm for the markets, which I just can't help because I love the markets, give me one of those. It's nice to see that you like what I do. So I've got a couple of likes already, which I appreciate. I really appreciate it. I like to know that you like what I'm doing. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, be aware of the risks at hand before entering any trade. Till next time, every single one of you, trade safe.